Are you planning an initial public offering or IPO for your company? Well, an IPO can be game-changing, opening up access to capital and promoting growth. However, if not handled with careful planning and strategic decision-making, an IPO can end up being a massive failure. In this video, we'll discuss 5 common pitfalls of an IPO and how to avoid them. Number 1. Finding adequate funds from one or multiple underwriters. Finding underwriters is a critical stage in the difficult process of taking your company public. These people have the power to greatly influence the course of your endeavor. However, negotiating complexities and market hesitancy can pose challenges when dealing with underwriters. To navigate this challenge, examine underwriters' prior performance, evaluate their financial situation, and make sure their objectives are in line with your own. Diversifying underwriters and having backup plans can be another risk mitigating plan. Be alert in the face of market fluctuations. Keep a strategic attitude throughout the negotiating process, and resolve conflicts quickly. This will set the stage for a successful IPO. Number 2. Going public in adverse stock market conditions. It's obviously difficult to manage an initial public offering or IPO in an unfavorable market. It affects investor confidence and costs. Timing is always key. Analyze market and economic trends for stability. Postpone if the market or niche in your industry isn't favorable. Having a flexible IPO calendar enables you to react strategically to developments in the market. Open communication with stakeholders and underwriters facilitates quick decisions based on current evaluations. Prepare for bad times by enlisting committed institutional investors or putting stabilization measures in place. When done at the right moment and in a favorable market environment, an IPO can be successful, raising the likelihood of a smoother transition to the public sector. Number 3. Filing too many repetitive and unnecessary amendments. Filing many pointless and repetitious changes can be risky in an IPO. It can result in more expenses, delays, and doubts from possible investors. To prevent this, prioritize rigorous pre-filing analysis to guarantee completeness and clarity. Simplify the documentation by removing unnecessary details. Consult legal and financial counsel to improve accuracy in filings and minimize the need for follow-up modifications. Finding the ideal balance between diligence and filing amendments quickly can contribute to a seamless and economical IPO process. Qualified legal counsel is imperative to make this happen. Number 4. Overvaluing the company. Overvaluing the company during an IPO runs the risk of undermining investor trust if the stock drops below the IPO price after trade, putting a burden on finances and raising doubts about the company's actual value in the market. You can reduce the chance of a post-IPO stock price decline by making sure the valuation is acceptable in light of market conditions and industry benchmarks. Establish trust by being open and honest in your communication with investors and underwriters regarding the risks and the valuation process. Establishing a reasonable offering price matches it with market expectations, reduces the possibility of a drop, and increases investor confidence for a successful market debut. Number 5. Poor communication about logistics and company performance with investors. Inadequate investor relations and logistical communication impedes efficient trading and increases unpredictability. In order to resolve this, work with an experienced stock transfer agent who can advise investors on how to conduct smooth transactions and transfer shares to their brokers quickly. Having a strong team is essential because they can help investors with the questions they have, including helping them with their most important stock transactions. When there are clear channels of communication, investors can more easily manage their holdings and align their expectations with the company's strategic direction.